Hey Frank, what's going on today? Thanks so much for taking out the time and chatting with us.
No problem. Thanks, Pete, for having me.
So I know a lot of people, when they dive into the podcast, they want to give a good background. So if you could, can you give a little background about yourself and then also what you're doing these days, especially with business and everything else?
Sure. So I grew up in the Philadelphia area, went to the Naval Academy, did my, major in aeronautical engineering, did my graduate work in applied physics at Johns Hopkins. I was commissioned in the Marine Corps in 2007, so was an infantry officer for 7 years. Deployed twice to Afghanistan as a platoon and company commander, kind of 2009, 2011, that kind of time frame. Spent a little time in government R&D at the Office of Naval Research. I was portfolio manager there for a couple of years, investing in kind of R&D projects for the Navy and Marine Corps. I made a total kind of 180, got out, had a kid, moved to London, took a job with McKinsey and Company, the big consulting firm.
Yeah.
Spent a couple years there and then transferred to Atlanta in about 2016. And, so spent some time as a management consultant, kind of working with a few kind of bigger companies generally. And, but really kind of across a lot of different industries. Eventually left that and went to Georgia Pacific, where I managed a portion of their B2B paper towel business.
Okay.
I really liked GP, culture and the folks I worked with and so on. But it's sort of a big, slow moving ship. It's one of those things where I had about 25% of the US market. And if I did really good, maybe it could be 25 and a half. And I did really badly, maybe 24 and a half. And it's actually a brilliant business that, I learned a lot about kind of operations and manufacturing and, kind of P&L responsibility for the first time. But it left me a little wanting. So my eyes were wandering. And about a year into it, or 6 months into it, really, my brother-in-law, who's based here in Atlanta and has started a string of successful real estate companies, he's like, I've had this idea kicking around the back of my mind forever, this kind of room rental business. And, I know it works. I've done it on a portion of my rentals, but, there's operational challenges. It's, at the time, the heady days of 2017, we thought, oh, it's so expensive to buy. You can't, the market's so hot. So clearly don't rely on me for any sort of timing the market sort of advice. But, we looked at things and thought, hey, this could be big, as rents increase, as kind of affordable housing kind of disappears and it becomes more part of the national conversation. Maybe there's a real opportunity. And we're kind of at a really interesting time, still are, of course, but where, this model's been around forever. People ask us about it. I mean, we'll kind of talk more about PadSplit, but people say, oh, this is so interesting. Like, how'd you think of it? And you're like, well, this model's been around forever. People have been doing, we've all done it at different times in our lives, whether it's student housing or Golden Girls, right?
Yeah.
However, we get to a point in the middle of our lives where we tend to kind of think of it differently, but really everyone's in shared housing. What's weird is kind of having your own apartment, right? I have 6 people in my house. It's not because I'm a psychopath. It's because I have a bunch of kids and a nanny and kind of all that stuff. So everyone kind of shares a kitchen and shares a bathroom. This is kind of how most people live. So we thought, okay, how do we bring technology bear? How do we bring kind of a customer focus that doesn't exist in a lot of real estate to bear to solve this problem? And PadSplit was what really came out of that. And so what we are at our core is this marketplace platform. So think kind of like Airbnb, but instead of being fractional in terms of time, with one occupancy, we're fractional in terms of space. So one room. So hyper-focused on workforce housing and really kind of, serving the members of our community who, they're working full-time, they're doing their best, but realistically either can't afford market rate housing, don't qualify for subsidized housing, or, need a little bit more flexibility in terms of the lease arrangements and so on. So really kind of bring that to bear and working with investors to create outsized returns so that they can solve the problem. And that's really kind of the insight we had was, if you can create affordable housing with above market rate returns, you solve the problem because you're operationalizing the capital, energy, intellect, and just kind of problem solving capabilities of private investors to solve the problem. And if you can't generate above market returns, you might as well go home because there's no business. That's kind of what we're all about. So we've been at it now for 4 years and change.
Okay. And so the reason I wanted to bring you on is because, for one, like you said, it's been around for a long time, but I want to be able to talk to someone that's in the space that does a lot of it and is successful, especially in different states,
Yep.
which you guys have been able to do. So I think a lot of my questions and how, for you, when I see this business model is, how are you guys able to scale in different locations and be able to provide different, properties, housing for one, the investor, and two, for the individual looking to rent.
Yep. So well, maybe I'll answer your question in reverse. So on the resident side, we kind of came into this with a conviction that there's just huge unmet demand for the product, right? Because the barrier to entry for even Class C apartments is pretty high. You figure if you have to qualify for 3 times rent for your income, and maybe do a first and a last month's rent and 1 month security deposit, turning on utilities and the deposits and so on, you really almost need to have about call it $3,000 in your pocket to get into an apartment in these days. And unlike even when we started the business, it's almost impossible to find a sub $1,000 a month rental in really any metro area. It's almost impossible, even in relatively low cost cities. I'm based in Atlanta, but you can kind of look anywhere. It's not just a New York and San Francisco thing. So, and that's largely been borne out, for better, for worse, as kind of more pressure has been put on renters and rents have, raised generally, and asset prices have gone up, and thus rents must go up as well. We've never struggled to kind of fill the rooms, so to speak. I mean, can you do it well? Can you do it quickly, efficiently, screen well? Those are all kind of challenges that we kind of work through, doing screening for folks who maybe are thin file, that kind of thing. There's certain art and a science to that, but we definitely started with the mindset that we're in a supply constrained market generally. There's plenty of renter demand. The question is, do you have enough supply, and can you execute well? So then when you look at how we've gone to other states and markets, we're in 10 markets today. So predominantly kind of Georgia, Texas, and Florida, but also Las Vegas, also Richmond, Virginia, also New Orleans and Indianapolis. So a pretty diverse set of markets. I mean, generally kind of Sunbelt, regulatorily friendly markets, but different zoning. I mean, even within, say, Atlanta, which is our biggest market, there's 83 different municipalities that have different zoning, different regulations, and no one's an expert on all of them, right? And reality of what we do, and really what anyone does in the space, is the real estate's hyper local. And even say here, where I know the market well, and I know the municipalities pretty well, and more than a passing knowledge of some of the zoning and so on, can't know it for all of it, and it's up for interpretation, so on. So one of our initial theses was, we want to work through local investors, not just because it allows you to scale quickly and it allows you to bring people in and leverage more capital, but because local operators know their markets better. So for example, as we've kind of grown out into new markets, I'll use Las Vegas as an example. I love Las Vegas. I was stationed south of there for 4 years in 29 Palms, California. I have a sweet spot for it in my heart. I don't know a thing about the rental market there. And for a long time, people would talk to us and say, hey, what do you think about this market, that market? And our general mindset was, yeah, I'm sure there's demand. That's not the question. I'm sure there's someone who works in hospitality or food service or security guard who would love the product, whether it's Las Vegas or Harrisburg, Pennsylvania. That's not the question, but the assets, how do you make it work? How do you work with regulations? It really takes local operators who know the market and have conviction about it. So we would have folks come to us and say, what do you think about Birmingham? Are you guys want to be there? It looks inexpensive. Maybe it'll work. And my view is always, well, hey, maybe it would, but do you have conviction about the market? Will you be there? Do you already have a portfolio? Do you know it? Or do you put in a property screen on Zillow and find, how many bedrooms can I buy for a certain price point? Because that's not a thesis that I want to support. With conviction. So with Vegas, worked with a local investor there named Carl, very successful, real estate investor and SFR operator. He owns several hundred properties across, a couple markets, has all his operations. And realistically, it's, I'd love to say we're the reason that it's been a really successful launch and we're geniuses and everyone should pat us on the backs as we filled up the houses so quickly. But really, Carl's the one who deserved the credit because he did it, right? He knew how to, knew which properties to choose, which, kind of sub-markets and so on. So I'm like in the middle of the camera.
Very good.
And, knew how to make it work, had his own renovation crews, really knew how to operate them well. And, so he provided a great product. He knew what he was doing. The only kind of genius we had was to be smart enough to work with people who know what they're doing, and so, yeah, it's going great. And, as we look at the markets where we've been really successful launching outside of Atlanta, which we know well, it's much more the who you work with. And that, if that's right, everything else kind of takes care of itself.
Yeah. So speaking of that, like people know in the areas and stuff like that, for you, how quickly do you guys ultimately, move on a market where it's like, hey, this is exactly what we got going on, and we want to get into, let's say, we do all the data and we research it and we have that person there that's good. How long does it ultimately take for you guys to actually make a move and purchase something?
So it can be very quick. We can move very opportunistically. In reality, usually takes a couple months. So as we think about what we do to open a market, there's really three screens, right? So one is the legal regulatory space, or our legal team will dig in and say, hey, at a high level, given kind of the major metro areas, so Las Vegas proper, but maybe not Henderson, Nevada, or what have you, what is the letter of the law? What do we look? Is there local case law? That kind of thing. Way above my pay grade. Don't trust me to do it. But our lawyers do it. They're great at it.
Yeah.
So that's one. Looking for kind of things that really stick out to de-risk. Second is the demand side. So really any major metro area we're going to feel pretty comfortable with. But in general, if you have kind of net migration in a market and you have a big enough size that you're not too worried about finding enough people, it's going to be fine. So Vegas, for example, scores very well in those metrics, but it wouldn't necessarily have to score that well. But really, it's what I call the pro sports. If you have a pro sports team in your market, it's probably going to be just fine. For purposes. And then the last part is the supply, which really comes down to the investor and working with them on kind of a bespoke program to get them set up for success. Now, none of what we do on the asset side and the investor side is rocket science, but it is a slightly different lens that you would look at a property than you would for a traditional rental. So it's still single family properties, but you typically want a little bit bigger so you can get to more bedrooms, the kind of neighborhoods you look at. So we really provide that lens and that framework through which you'd evaluate a property. So, give some kind of obvious things for us. For example, it's all singles. So school district doesn't matter as much, whereas it might for traditional rental. We like being close to public transit. I see a property with parking in the back, and I think that's great because it's fewer cars on the street, fewer neighbor complaints, that kind of thing. So none of it is difficult. I don't like cul-de-sacs because it's pinch street parking, but I do like corner lots because it's more. So it's just a slightly different lens that you can kind of teach to anybody. And oftentimes that's a portfolio review, and you go through and say, okay, I like this one less so, this one's too small, and so on and so forth. And just to set up the investor for success, because our view is that's our growth engine. When investors are doing well, they're human. They do what humans do. They do more of it. They tell their friends. When they do poorly, they do the opposite. They do less of it, and they tell their friends we're terrible. So we're hyper focused on investor returns.
Okay. With most of the markets these days, with prices so high, what are you guys looking for on the spread for the investor? And are you guys doing a lot of syndications? How are you doing that with investors? Or is this just one-off?
So it's the kind of capital structure of the deals is typically done by that investor. We have everything from institutional folks who are doing it at scale with a part of their portfolio, or family offices, that kind of thing, to mom and pop investors who are scraping together enough to do their first property. It's a side hustle, so we're relatively agnostic and kind of everything in between. People are syndicating, what have you. We much more focus on kind of the asset and helping them out on that front. But we work with kind of everybody. That's not really the big um, question for us on that front.
Gotcha. Okay. And so for you, when you guys started out versus today, what does your kind of business look like with hiring and everything else and employee status?
Yeah, so we've got 160 some people today. I think 166. We're fully remote, so we're kind of international, all across the country. Engineers in Europe, customer support in Philippines, kind of engineers here, there, everywhere, kind of everything. So, yeah, pretty diverse team, very, very much spread out. So, yeah, grown a lot on that front. As far as units go, we have about 4,700 units today on the platform.
Okay.
So, yeah, and kind of based in those 10 markets.
Gotcha. Gotcha. Okay. And for you guys, how do you guys source a lot of this, at least, picking up people that are engineers to, sounds like some VAs to, full-time staff that are working remote?
Yeah, by hook and by crook.
Yeah.
Definitely. I mean, the engineers, we've long had a strong presence in Eastern Europe. Our CTO is a very brilliant guy, John O'Brien. He's kind of the smart one of the co-founders. He's the Stanford PhD in physics guy. He really kind of built this machine where essentially goes on Eastern European LinkedIn and sources engineers, puts them through the paces. Fortunately, it's a pretty quantitative, easy to measure kind of a success story. We have an in-house HR team that's doing recruiting kind of otherwise, but a lot of it's through referrals. We get someone we like. Using employee referrals is really a pretty good screen for us. Not that we haven't had misfires. We certainly have. Growing as a startup, kind of through COVID, we had an office, shut down the office. We've had 19 people in Ukraine when Russia went in. Now everyone is fortunately fine, but we still have a few folks remaining there, but others have been kind of cast to the wind. So it has not been without its struggles and sleepless nights, for sure.
Yeah. I see that, like just like your, I would say core competencies with getting properties is the same as getting those people, those individuals that are going to be a good fit for the company to be able to grow that, right? It seems like on hand in hand, just hearing the dynamics of it.
Peter, you're so right. I mean, couldn't be more right. It's we are a fit business. Maybe someday I'll figure something out that's kind of all things to all people, and everything will work for everybody, and that'll be great. PadSplit isn't that, whether it's people or it's houses. It's all as I like to tell investors, it's when you have the right residence and the right asset and the right operator, it works great. You get double the yield. Everyone's happy. You retire early. And if any one of the legs of that stool aren't there, it's a mess. It doesn't go well. You're not happy. You have heartache. And so it all has to be there. And I mean, the people are everything, really.
For sure. Yeah, no, I agree. And it seems like you guys have done it well. What do you guys see in the space, especially now with the market change and everything else? We kind of chatted about it before we jumped on the phone. Yeah. What do you guys kind of see going forward? Have you guys changed much, underwriting and everything else? Like, what are the things that you're looking at now? Obviously, with the interest rates, it's been a different beast. But what are the things that you guys have changed in your business, and what are you looking forward to?
Yeah, so not too much has changed in our business. I mean, like we're discussing, it's the uncertainty that I think gives a lot of investors pause more than the kind of absolute changes in, say, interest rates or whatever. I mean, we're essentially always measured relative to traditional SFR. So, our kind of benchmark is, you want to increase the yield by at least 50%. And we, on average, about double the yield. So, in general, we have kind of headwinds and tailwinds from market uncertainty in that, and, whether it's raising prices or raising interest rates, and that, as for the past, call it, 10 years or what have you, real estate has been quite idiot proof, but it's been, pretty close in that, you buy a place, even if you don't do everything right, it's going to be worth tomorrow than it was today. It's going to be worth more the next day than it was. Appraisals will be easy, and interest rates have been really low where, it's like, okay, I'll get my money out later. It's fine. what's my DSCR? It doesn't really matter because, it'll be fine. And rents have, climbed and all that stuff. Well, for, a lot of that hasn't really changed for us. It's more what we're being compared to that's changed. So a lot of investors in kind of the traditional SFR space who have been, I don't want to say on cruise control, because you can certainly screw it up, but, pretty close, have a pretty steady, kind of comfortable business, are now saying, well, I projected these high rents. I projected having great interest rates. And I don't know, maybe if we're in a recession, I don't know how we'll do with raising rates. Maybe it won't be as easy as it was and when I was making my pro forma, or hey, interest rates are up. I don't know what. Maybe my monthly payment won't be as low as I projected when I refinance and so on. So maybe I won't get the appraisal that I want if the market kind of slows down. So for us, we look at it and we say, okay, well, we've always had a great DSCR, generally about double what you would have. So the interest rate changes it doesn't really change which deals pencil per se. But it's more just, when people don't know what's going on, a lot of times they want to stop buying, they want to hang tight. And that's not a crazy strategy. I'm not criticizing it, but it's much more the uncertainty than it really changing the game for us.
Yeah, for sure. Yeah, I mean, I think, right now I would say this, we're kind of in that market now where people have already realized, first it was kind of like, are we in an inflationary market, which, we kind of really knew beforehand, but now it's, okay, well, we get it now. We get the landscape, let's be creative to move forward and to be able to tackle certain things that maybe it's had an issue prior in the past. And now we just got to underwrite it just a little bit differently for price appreciation. It might be different. It might be off versus, those other markets where before it wasn't off. You could, underwrite it very gingerly and still get, 15, 20, 25%.
Yep. No, you're absolutely right. I mean, nothing in my mind, nothing has changed about the fundamentals of investing. What has changed is that maybe you need to be more disciplined about it, really. And, obviously a lot of people, they're looking at a deal and they say, hey, I'm going to raise rates. I'm going to raise the rents at 5-10% a year. And I'm going to be able to take out my money at a huge benefit. It's going to appreciate 10% a year. Well, if that's the case, every deal pencils, it's hard to not make a deal work if everything's going in the right direction. And now, I think some investors are certainly out over their skis where, okay, whether it's utilities or costs or labor of, kind of managing the properties, that's gone up. Maybe prices are going to kind of stagnate or at least not have kind of a 10% year over year gains, and maybe rents won't be as easy to pass through. So, but the fundamentals haven't changed. The way you do a pro forma is the same. You're just kind of thinking harder about it and maybe being a little bit more circumspect.
Yeah, for sure. For at least your models and stuff like that, the first couple of years, getting those to make sure that everybody was on board and the systems and everything else. How'd you guys kind of structure that? I mean, with making sure that everybody's underwriting the same deals and stuff like that. Was that one of the biggest undertakings that you guys had to grow as big as you did, or was it something else?
Yeah, there were kind of two elements to it. So one was really around operations, in that, we'd have investors who would say, the concept is simple. They'd say, okay, I've got a 6-bedroom house. I rent it by the room. It's clearly much more money. I like money. It's not that's easy. But they'd say, oh, I don't know how I deal with this. I don't know how I deal with that. And what if people like it? What if, Peter eats my peanut butter? I don't know how I'll deal with this. So when we started, long before we built the technology platform or anything else, we'd actually build a property management company to run the operations for folks. So it's just local. It's still a going concern. Still, it's a subsidiary based here in Atlanta, but we'd essentially take properties from investors. We'd say, hey, Peter, renovate it to our spec. We'll kind of walk you through that process, and then we'll do a profit share where we'll be at risk too, and we'll kind of go from there. That wasn't a great model to get to scale, or to scale with, because it's very operationally intensive and you're relying on investors. It takes a really kind of close relationship to do it well. But it was enough to kind of prove out the model. It was sort of our laboratory in a lot of ways for the operation. So that was kind of one component of it. And then the second piece of it is around credibility. And there's no kind of silver bullet for that. I think we took kind of multi-pronged approach. Some of it is really getting involved early in the process, oftentimes pre-acquisition, where we're saying, you might come to us and say, hey, I'm looking at this property, 123 Main Street. And we do this to this day. We might say, look, let's walk through a pro forma, or, hey, let's look at it. And, it's on a cul-de-sac, pass, or what have you, and kind of walking investors through to build that confidence and building our vendor ecosystem so that, we're not a general contractor. I'm not a general contractor. Don't hire me to be a general contractor.
Or me. Yeah.
I'm over budget and under quality. We kind of built this network of folks who are good at it and, you could trust. And we'd say, go to Tyler. He's great. He's done it, times before, to kind of make it as easy as possible. I mean, you want investors to be engaged in making decisions. You don't want to kind of punt on the responsibilities, but you do want to make it as frictionless as possible. So really kind of digging in with investors, building that confidence. And then, for the most part, investors would do it once or they do it twice and they say, this isn't that hard. Do I need to run this by Frank to see if he likes the address, or I know what I'm looking for. Hey, I think I can manage this construction project, and kind of go from there.
Yeah.
So really just getting involved, understanding their objections, and kind of helping them with the work. So both those things in tandem, I think, are really important.
Gotcha. And I would like to speak about this because I know it's shifted the past couple of years. Since you guys are all remote, how are you guys doing it with, company culture and everything else, being able to build the foundation for a successful company like you guys are, and consistently do that on a yearly basis with more and more employees that you've added?
Yeah, it has not been a perfect process. I'd like to think we do pretty well, and we still have a pretty substantial core of people in Atlanta. So we're still seeing each other a lot. We actually had our whole exec team, all of our product managers in town this week. And so, some of it's racking up the airline miles and doing in-person events. I mean, we do have a very strong focus on getting out into the field. All next week, I'm kind of flying around. I'll be in a couple different cities, meeting with customers, but also meeting with team members who are meeting with customers and that kind of thing. So that's really important. We actually had our entire team live in PadSplits this week as part of that process, which is slightly different in terms of building culture, but it's a matter of understanding the product, understanding the booking flow and where are the pain points and all those things. And, imagining it. I mean, it was actually, I think, really instructive for some of our engineers when they like, man, I was trying to move in and I pull up the text and my move-in instructions were in an email. Like, why do we do that? It's like, I don't know. Why do we do that? You're the one who did it. So, so that's really important. And a lot of it's just kind of, picking up the phone, doing the calls, doing, it's like, for us, it's a big cultural no-no to do a meeting with your camera off. And just kind of moving up that hierarchy. Some things you need to do in person, some things you need to do via video, some things you need to be a call. And look, we're on Slack all day and, it's all good. But how do you move up that communications hierarchy to kind of get in the room? But there's no substitute for just kind of getting people, probably quarterly, not the entire company per se, because that's almost impossible, but, sizable groups of the company are in person. Our kind of group in Atlanta, we do a lunch every other week where it's sort of a working lunch, but it's really not. It's just to get in front of people and kind of hang out and sort of see what's going on and just be in person. Because it's so easy, I think, to just kind of forget that and, use the cold, hard text of Slack to just kind of get your point across. And you lose a lot in context. Now, that being said, I do think it's harder. There's no doubt about it. I miss a lot of being in the office. And some of it's, I manage our kind of sales team, and, it used to be much easier to bring on new sales reps. They're in the room. You'd say, hey, I got a customer call. Let's go in a conference room. I'll put on speaker, and you just kind of listen in. And that's almost impossible to do today. You don't have those sort of serendipitous kind of events happening. which is too bad. So I particularly worry about younger employees who haven't, maybe they're right out of college or just kind of new to the workforce, where what's their work experience? What's their work experience being in an office and kind of working with people?
For sure.
They maybe didn't even have classes in person for a long time. So
yeah, that's a good point. I never thought about that.
Yeah, so I think it's a bigger struggle for them. So for new employees, onboarding employees, I think that's a much bigger challenge. But yeah, I mean, like for example, our sales team, all the training is in person. Of course, then we do shadowing calls and all that stuff, and they need to be able to work remotely because investors are everywhere. You're not, you need to talk to a lot of folks, but yeah, there's no substitute for being in person.
Yeah. I'm always curious, especially depending on the company and stuff like that. I mean, some are, a lot of them are remote, and it's always that push and pull of building a good solid foundation and culture, to move forward, to look down the line and say, okay, this is what we're going to do to continue to adjust and make sure that we stay within the same trajectory as what we wanted to be.
Yeah.
Well, so for you guys looking, in the future, and when you got into this, did you guys kind of have, since you guys have grown fairly quickly, did you guys have this plan in mind, or was it developed the first year as you guys like, okay, well, hey, I know a lot of startups, this is kind of a formation as it goes, but at the same time building those blocks to get there. How'd you guys kind of do it when you were starting out?
In terms of the team or the product, or?
Yeah, the team. It sounded kind of like you guys had the vision in mind for the product, and building that team. How did you guys, look at that, as it seemed like that was a challenge?
Oh no, definitely was. Yeah, I would love to tell you we had some grand vision and we executed it. We mostly stumbled around a lot. We're early on, everyone was in Atlanta. We kind of worked out of the office, very small team. We would do, it's funny sometimes to think about it. We write a weekly update to all of our investors every Wednesday night. So I'm getting ready to do it. Myself and our CEO and a few other folks sometimes contribute. And the reason is because every Wednesday when we were in this tech accelerator, we would have a weekly kind of meeting, and it just kind of grew out of that. And then it became our kind of weekly lunch. But when it was 6 of us, we'd have our weekly all hands, and we'd literally walk around the table and be like, what'd you do today? What'd you do today? And so on. And now we're at the point where it's 160 people in our all hands, which we had earlier today. Clearly we're not going around, everywhere, but, it's just sort of remained on that kind of cadence. But yeah, it's changed a lot. Honestly, when I think about how we've been organized, whether it's how do we integrate sales and marketing, because the resident side is much more marketing focused, the landlord side is much more sales focused. How do we integrate those two? To how do we think about general managers for markets? For a long time, we didn't have markets, so we didn't think about general managers. So how did we, all of a sudden we eventually got to the point where, like, who's actually managing these markets? Who actually cares? What are we doing? Is it all just kind of willy-nilly? If we're at 100% occupancy in Atlanta and 0% in Tampa, do we care? Because the overall that puts us at 95%. That doesn't seem right. So we've really kind of changed the way we've been organized as we've changed, and as we've and some of that's personnel driven. You just kind of, I don't know, we make it up as we go. But yeah, we're like a lot of startups, we've had an org change or 2 or 10, and kind of shuffled the deck a bit. Even something as simple as we've gone back and forth between, like we used to have market launchers, and they're like, well, that doesn't actually work. Sales reps are the ones who are launching markets. We need market general managers who are kind of there on the back end. And how we think about customer support, and is it both sides, and how do we think about the tiers? And it's plan is a gross overstatement for the bumbling that has been reality.
Yeah. No, there's a lot of moving parts, especially, different locations and everything else. And it seems like, that built with a culture is something that you guys have done well. Looking forward, what do you guys kind of, as you've gone through the past, 6-7 years, what are you guys looking next? What is, 4.5, what are you guys looking next, and where are you guys going to be in the next 2 to 3 years?
Yeah. So our real goal is to get to profitability during that time. Because for totally selfish reasons, we would love to never have to raise money again, and just kind of go from there. And that's a stretch goal, but one that we think is pretty achievable. And really kind of building out our depth within markets. I think for a long time we felt maybe insecure about saying, okay, we're so heavily focused in Atlanta. How do we just open a bunch? And, I think it's some of the pressure of taking venture capital money where they're like, just open everywhere and you'll be fine, and like blitz everything and, whatever. And the reality of kind of real estate and having real assets and kind of the network effects of our business made that difficult. So, really think about how do we go deep with investors that we have, really do it well, have a real presence in markets where we feel that we're defensible and kind of have a really kind of core offering. So yeah, going deep markets and just growing. I mean, that's really kind of the big thing. I mean, everything for us is around having rooms and filling them. And, right now in some ways I look at it and think, man, 4,700 units. I remember when it was 47 and we thought we were really like kind of bursting at the seams, but really it's like, that's not where we want to be. We want to be at 47,000. We want to be at 100,000. That's kind of our ambition for it. And yeah, I mean, a lot of that is the kind of final piece of it is really building a world-class product on the technology side that is much more than the nuts and bolts. The kind of functional piece of bookings and the marketing and all that is great, but what's really kind of different. How do we kind of revolutionize screening for thin file residents? How do we really kind of suss out what is possible in kind of co-living with communications and accountability? And how do we think about, I mean, just to kind of nerd out for a second, almost everyone's like, oh, ratings, you do ratings and it's fine in a marketplace. Well, that's all well and good when it's a one-shot game. If you're Airbnb, you stay in my house, you give me a good rating, bad rating, it is what it is, but you're never rating me again. And I'm going to have 10 more ratings. So it all kind of come out in the wash.
Yeah.
It's long-term residents. So ratings matter. And not only do they matter, but they're also not decoupled from other people. So, you're in a house with 4 other people and I'm the worst person in the world. You're having a bad experience. So are the other 4 people. Is that the house? Is it me? In this case, it's me. But how do you kind of decouple those ratings? Because there's, we kind of, you try and measure everything, but in our minds and in the minds of the customer, it's not, it's not decoupled. If I'm mad because, if you're mad because I'm a terrible roommate, you're mad at the house, you're mad at the host, you're mad at life. But how do we know that? Does it, impact your payments? And then, really just kind of developing our reputation for just having kind of a radical customer focus that in general, real estate doesn't have for lots of reasons. And I'm a landlord, but, landlords are lazy. Like, for example, we bill weekly and we let people set their own payday, mostly because, our view is that, especially for low-income residents, especially for people who might be, paycheck to paycheck or, paid cash or paid kind of weekly or biweekly, when's the first of the month? Well, okay, it happened to be 2 days ago, but generally you don't really know. But when's Friday? I always think Friday is. It's in 2 days. Like I paid on Friday, my bill's due. Now, landlords, why do we bill on the first? We do it because we've always done it that way, because our bookkeeper likes it, the lender likes it, all those things. And that's fine. So we're kind of the interface for that. So we pay out at the beginning of the month. It's easy on the bookkeeper. It's easier on the lender. But it turns things around because, one of the things we've noticed, and essentially every landlord may have noticed if you think about it, is, maybe you evict a tenant and you say, why didn't you pay the rent? Whatever. It's like, well, I paid my cell phone bill and I paid my, gas bill and I paid my furniture bill for my furniture rentals, and they all came in the, you pay bills sequentially. And I'm like, it's a terrible idea. The gas is getting turned off.
Yeah.
Couch is going to be on the street, you weren't thinking about it, but that's human nature. Rent-A-Center is smart. They bill at the end of the month. They're smarter than landlords. So how do you kind of turn that around so you're kind of always top of mind and kind of making it as easy as possible for people to pay as much as possible? And
That's
kind
a good idea.
In that paradigm.
Yeah, no, it's a good idea. Yeah, and I mean, like, usually, do you guys get where people are like, okay, hey, Friday, but can I do it Sunday because I'm not working?
Oh, all the time. Yeah. I mean, and so one of the things that we do for the hosts and the landlords is essentially run that whole collections process. Cause you figure, you have a house with 6 people in it paying weekly. You might have partial payments, you might have 30 payments a month. No one wants to deal with that, all the complexity. So
Yeah.
all the time, I mean, a lot of what our collections team does is, people saying, hey, I just got my late fee, can I pay now and get, it's like, okay, fine. Yeah, we'll waive the late fee, you'll get paid and so on. And kind of take it from there, manage that complexity, because it's much easier to do it for a couple thousand people than for the 6 people in your house.
Yes. Yeah, for sure. Yeah. And I think that, a lot of people that look to more put it on autopilot,
Mhm.
um, that 6, 7 people or 5 people that are in the house, doing that collection is going to be a lot tougher for them. And they're not going to have the capacity to do that. So taking that over and bridging that gap is huge.
Yep. Yeah. I mean, it's when we kind of got into this, the state of the art, so to speak, was because a lot of people in this business, they do weekly payments and they do cash payments, all those things. And it's like a metal box in the house, and a maintenance guy goes by and pulls out, money orders and that kind of thing, and clearly difficult to scale. But we were kind of fortunate in terms of, when Atticus did his first one in 2009 versus today, the world has changed. Everyone has a cell phone.
Yeah.
No matter what, it's like you don't have a dollar of income. Everyone has a cell phone.
Yeah.
The fintech world has changed. Today you can walk into any Walmart, any CVS, get a prepaid debit card, make an electronic payment. Whether you can be totally unbanked and still be fully within kind of electronic payments, and that wasn't true 10 years ago. But today, everyone knows how to do it, and it's simple, and you can do it in any city and anywhere. So, fortunately, for us, we came around at a time where technology made a lot of these things possible that just it wasn't possible before.
Yeah. No, for sure. Yeah. It's a lot easier. So you talk to people and they say like, mailbox money and stuff like that. That term's kind of gone out the window. Now it's just it's sent electronically, which is a lot easier and a lot nicer. You just got to get those people on it to make it, seamless and the collections be a lot easier for sure.
Yeah.
So, well, I'm going to transition into a last couple of questions, but for you, is there, I know you guys have online resource for people to go to, for one, looking for properties, and two, for hosts, as well. What's a good platform that you guys use, or some type of technology that you guys are using to make it, fairly seamless? I know you mentioned Slack earlier, but is there another platform you guys are using, or online resource?
A ton. Yeah. I mean, we are Slack power users. Let me think kind of the full stack of what we use. It's somewhat daunting sometimes. Our sales funnel is all built in kind of Salesforce, nothing kind of crazy there. Our kind of sales stack generally includes Chili, Piper, and Gong. Both are kind of great tools. Yeah, I mean, let me think. What's kind of favorite for me? I do love Slack as much as I kind of hate it, because it's all consuming.
Yes, it is.
Yeah, I mean, yeah, I really like DocSend for kind of sharing things with investors. We've had, yeah, I mean, gosh, everything across the board. I really like Gusto, which we use our kind of HR and payroll platform. I thought it was kind of. I'm not much for a lot of this stuff, so if I can set it up, it must be pretty easy. So yeah, I think it really is a lot easier these days to kind of set up a lot of this stuff as a small business and kind of handle it, even when you're a bit of a layperson.
Yeah, no, I agree. What about a book that you're reading right now or have read that's really helped you out?
So well, help me out. I don't know about that. I like to read. I like to read for pleasure, or things that I find interesting. And people are like, "What real estate books do you read?" I'm like, "Oh, I don't know. I try to, business and pleasure." But one that I read recently that I loved and I thought was super interesting. All of my interests are kind of weird and niche. So I read this book, Junkyard Planet by Adam Minter, and it's all about basically the scrap industry, but super super fascinating. It's kind of following things as they get, thrown out. And, like, for example, if you throw out Christmas lights, they get sold as scrap, they get sent to China, and people literally scrape off the plastic insulation and turn into sandals and all this stuff.
Really?
I love trash and weird stuff, so that was kind of right up my alley, but
That's cool.
super fascinating.
Yeah, no,
But
that's cool.
real estate, yeah, I don't know. I mean, I loved, I read The Power Broker last year. I finally buckled down and read it. It's about Bob Moses and kind of more about like urban planning and development, I think, but kind of the creation of New York and kind of the modern New York with kind of the interstates and bridges. And yeah, really, I mean, it is a big project to take on, which is why I kind of avoided it for years, but it's really, really kind of brilliant and kind of learn a lot.
Yeah, I've never heard of The Power Broker, so I'll take a look at that.
Yeah, by Robert Caro.
Right. Okay, cool. Well, Frank, where can people find out more about you guys?
So easiest thing is just go on PadSplit.com. We've plenty of resources there. Of course, I'm very easy to find. I'm just Frank at PadSplit.com. So you can always kind of reach out to me directly. I'm super easy and would love to hear from you.
Well, cool, man. Well, is there anything else that I didn't cover or anything like that?
No, just thank you so much for having me. Appreciate it.
Yeah, I appreciate it. Thanks so much, Frank.
All right. Thanks, Peter.
Talk to you soon, man.
See ya.